Right, hello everybody. Welcome to the Trend Signal podcast for the trading week ahead from the 12th to the 16th of October. My name is Adrian Boothie. I'm the head of trading here at Trend Signal, and to help us go through the calendar of events for this coming week, the events that are going to stimulate movement for the FX indices and commodities for the week ahead. I'm joined with Jerry Miller, our chief analyst. Hello, Jerry.
Hello again. Hi, Adrian.
Right, so relatively quiet week this week for economic data, Jerry, but why don't you take us through, please, some of those main events?
Yeah, you're right. It is a non too busy schedule this week, but in a way, it doesn't matter too much. I mean, we're missing sort of key central bank meetings and employment data and such like that. But there's still quite a bit that can affect the markets, but most of it's to do with the presidential election in the United States. 22 days to go, 21, 22 days to go. So, and Biden, wow, he's a long way ahead. Well, relatively a long way ahead, sort of between 9 and 14 points. A lot of polar polls are putting him about 10 points ahead and well ahead in the key battleground states. So those are the things that I think are going to be driving the markets. But yeah, let's go through the calendar anyway. You'll notice that there's a bank holiday in the States today, and I think some people are thinking the market's going to be shut, but they're not. This is what's called Columbus Day, and Columbus Day is not. It's a bit like Vets Day. The markets don't shut, but it is a bank holiday. So there's bank holiday in the States. So bond markets are closed, but not stock markets. So stock markets all open. So it's important to understand that. We've also got one of those sort of macro events that's not actually noted on Forex Factory. So we've got the announcement today by the UK government about the new local lockdown measures based on this three-tier plan which has been devised by the government's advisors. So that's going to be announced at some stage. What bearing that has, I don't know, but the feeling is it's going to really drag.
Isn't it?
Well, it does, and it's going to be a drag on the rebound, the recovery that we've seen, which is pretty muted when we look at the GDP data from last week. Yeah, so you've clicked on Andrew Bailey, the governor of the Bank of England. He's speaking at some citizens' open forum. It's not particularly, I think it's highly unlikely that he's going to say anything that's going to trip anyone up, trip the markets up, but you never know. That's 5 o'clock this evening, Monday. Tuesday, we've got UK unemployment count. It could be grim, but I think it will be grim in November, reporting on October's numbers, which is the ending of the furlough arrangement. So a lot of people who are furloughed who don't know it yet, but who are effectively being made redundant, and there's some very big numbers being talked about. I think some of it is going to be, some of those jobs are going to be protected by this recent support for the travel, tourism, hospitality sector. But there's a lot of jobs that are going to be going. So that's without getting too grim, but it will be grim in a month or two. US, we've got the inflation data, CPI, Consumer Price Index. It's the core number we look at, which removes some of the more volatile food components. Plus 0.2%. Really? There is just little sign of inflation. And in a way, with the dollar losing a bit of ground, it could start to add to price pressures in the US on imported goods that really have to be imported, either are inelastic. So it's possible that inflation could pick up in the months ahead. But actually, when you look at the next bit of data, Adrian, which is on Wednesday, that's called the Producer Price Index. So that's the cost of goods and services at the factory, so going into factory or production, I should say. So obviously a lot of services, a lot of production is services, not goods, but it's sort of like a leading indicator to inflation down the road. So, I don't know, plus 0.2%, no inflation, CPI, 0.2%. There's just nothing really at this stage.
In actual fact, I mean, we've got it here, as an amber warning of impact. You kind of think, well, inflation, that should be a pretty big deal because it's a major part of monetary policy. But of course, if anything, they've really said that in the States that they're not going to worry about inflation. It's about an average inflation over 2%. Well, A, we're nowhere near 2%, and B, it could easily be over 2% for quite some time before they start to do anything about interest rates anyway. So it's
that's very good.
A little bit muted, isn't it?
that was announced in the last FMC meeting and confirmed in the minutes, that the targeting an average inflation rate. The question is, how many months do you get a rise above the 2% before they act? Well, you're quite right to say we're nowhere near that at the moment. So everybody, relax.
Yeah, I guess so.
Thursday, well, we've had this talked about, and the weird thing is, I thought when I read the calendar for this week, although it's not in this particular calendar we're looking at, there is the start of this 2-day EU summit, which I'd been sort of reading about for quite a while, and this is the sort of when the deal, the EU UK trade deal that's been negotiated between Barnier and Frost, has to have made enough ground to enable the sort of detailed negotiations. But it just seems that the resolution to the fishing rights in this level playing field seem pretty elusive, and they're now talking about doing mini deals behind the scenes as a way of ensuring that there isn't sort of a cliff edge. So the EU are equally worried about it, and so they should be. But I just wonder what deal will be achieved when all is said and done. But the market seemed fairly sanguine about it, Adrian. When you look at how sterling's reacting, it's all very relaxed. At least it is for now. It is for now.
Well, maybe we've all become a bit immune to these shenanigans before deadline day. Because we all probably expect at some point that it'll end up getting a deal across the line.
Well, maybe there's just so much else, so much more uncertainty that it's difficult to price in all the uncertainty compared to like the euro, which has also got lots of uncertainty. Likewise, the dollar with the election looming. So it may be that it's because the investors can't see the wood for the trees. Maybe that's part of the problem. Okay, and then afternoon we've got the Philly Fed Manufacturing Index. The Philadelphia is a big sort of manufacturing region, hence it's quite interesting to find out how the manufacturing data is going there. But a slightly fall predicted. But I did notice over the weekend, Adrian, that infection rates are picking up in the States. They're now at a 2-week high. Was it either 52 or 54,000 per day? And you just got to look at what's going on, and you just wonder whether this could upend the recovery process, because I think the US are going to see a little bit more of what Europe are experiencing with this second wave. Although there is a feeling that they never got over the first wave. So is this the sort of first wave Mark II or the second wave? I don't know, but it's serious, and coming as it is, 22 days before the election. We've talked about how this is affecting people's voter intentions. The elderly, for example, in Florida, they're not happy about it. They're the people that got Trump over the line last time.
Absolutely.
So I think it's going to be really interesting. But there we go. Weekly initial unemployment claims, and the important thing is to understand initial unemployment claims, but stubbornly high, really above 800,000. You think if the economy was recovering properly, that you wouldn't keep getting these waves of unemployment claims. But it doesn't mean unemployment's still going up. It's trending down, but it's just worrying that there is quite a lot of circulating of new and old payroll jobs, as it were.
Yeah, I mean, it's interesting to look back at the sort of previous sort of normal, what is normal on here. Can't get the number now. What's going on with it? You're looking at sort of 69, 70s, 30s, something like that.
It's minute. It's minute. Yeah. Well, if you think about it, you were getting, you'd have non-farm payroll data of, 150, 160, 170,000 a month. So the weekly data is going to be, of a quarter of that type thing. But then
it only puts it into perspective, doesn't it? You sort of look at these numbers in the sort of the 20s. This is what 20 times higher than the normal numbers, and yet look how much lower it is than what we actually were at, or the US was at.
Yeah. But what surprised economists, I think, is the fact that it is flatlining a little bit over the last 4 or 5 weeks, and it's remaining stubbornly high. And as I said to you, with the risk that this pandemic is picking up again in the States, is got to be worrying, I'd say.
Yeah. It's got to be worrying for Trump as well. I mean, you would have thought he'd be loving those numbers to be really quite low by now, but as you say, it's more flatlining than anything.
he can talk about stocks, he can talk about how well the Nasdaq's doing, etc., etc. But when you're 82 years old and you've retired in Florida, you just want to know you can survive, and that's the thing that is your concern, not if your portfolio is going to go up another 10% at a time when you've probably got most of it in cash anyway if you're 82.
Mm. Exactly.
Anyway, I used 82 because that's the average age of mortality in the UK from all the COVID deaths. So it's quite an important age.
I thought you were saying it's the average age of Floridians for a second.
No, they're a healthy bunch, I can tell you, generally.
Okay, and Friday, Jerry.
Retail sales, an important number, probably one of the most important numbers of the week, really. Retail sales have been really strong in the past few months as the recovery took hold, but it'd be interesting to see whether it starts to wane a little bit at the moment. We're looking for core retail sales at plus 0.4%. Remember, it excludes some volatile components that distort it, but that's not brilliant, really. But this, and then later on in the afternoon at 3 o'clock, you've got the first reading of the University of Michigan consumer sentiment number, which is always sort of misunderstood really by Forex Factory, but I think it's a high impact number myself. It's a great leading indicator as to what's going to happen in the future, because if the consumers are happy, they tend to spend, and when they spend, companies make more profits. If they make more profits, stocks go up, and the government's happy and everyone's happy. So watch that number.
Yeah. Okay, anything else? So I think as we move into the new quarter, Jerry, we're sort of heading towards earnings season, aren't we?
Yeah, it does come around so quickly, doesn't it? I think that's old age, Adrian. But yeah, we're on for Q3 earnings season, and you'll know that Q3 has only just ended, really. So we're in fourth quarter, it's at the 12th, so they do get the numbers out pretty quickly, but it's the banks releasing this week, and there's a variety coming out at differing times, but they've struggled and will continue to struggle because their potential to earn with rates being crushed has really been compromised. I don't expect any fireworks from them, but that's happening this week. So that's the start really of the Q3 earnings season.
Okay. Well, I think that's pretty much it there. Thank you very much for that, Jerry. In terms of what else is going on? Well, as ever, we're running some live events this week. And this week, we are going to be choosing to teach our attendees at our live webinar events one of our favorite trading strategies. It's all about identifying turning points in the market that we can then apply to identify opportunities on the FX, index, and commodity markets. So if you'd like to come along, I'd like to log in live from your home, your place of work, wherever it may be, and we're going to teach you 3 simple rules to help boost your trading. And so if you'd like to come along and book yourself a free place, go to bit.ly, so bit.ly/learnts, so bit.ly/learnts, get yourself booked in, grab a pen and paper, and then learn one of our favorite trading strategies to help you trade with more discipline to help boost your trading results. But otherwise, everybody, have a wonderful week's trading. I hope you make lots and lots of profits, and we'll see you again next time. Bye-bye for now.